Good day, YouTube. This is Jay with Falling Forward Financial. Just bringing some ideas to you to think about for the new year. I think these will be some good ones. They're on the dip, and some of them are fairly cheap. Again, this is Jay, Falling Forward Financial. I want to thank you for all the support. Tomorrow, I believe, will be 3 weeks old and have about 70 subscribers already. My original goal was 50 by the end of the year. I surpassed that, so I'm shooting for 75 and set up a new goal for tomorrow. I'll be turning out some videos. I'll be telling you what my new goal is. Anyway, just wanted to bring these to your attention, something for you to think about. Again, I'm not licensed. I can't tell you what to purchase or sell. I don't give tax advice or legal advice. I'm just stating my opinion, just here for your edutainment. That's education and entertainment all in one. But anyway, 7 cheap stocks that can't wait for 2021. And I think some of these will be pretty good buys. Everybody loves a good bargain. So on the list, first is Alibaba. When someone clicks on an article about a bargain stocks to buy, they probably don't think they'll see high growth tech companies with a market capitalization over 648 billion. Baba is kind of on a dip right now, and as you can see, it's setting right now 231. It looks like it's down again for the day. They've kind of had some struggles. I was going to do a more in-depth video on Baba, but I haven't. Maybe I will tomorrow. We'll see what happens. But looks like it kind of was on a dip and kind of run up, and now it's coming back down. So we'll see what goes on with it. If you're not familiar with Alibaba, it engages in providing online and mobile marketplaces in the retail and wholesale trade. It operates through the following business segments. It's got commerce, cloud computing, digital media. It's kind of into a little bit of everything, kind of similar to Amazon. So anyway, it's a pretty good sized company, almost 630 billion. It's pretty average trading. It's been around since 1999. Some of these articles I was going to throw in, but I didn't want to make the video too long. It's got great ratings at a 96%, and I have had it in the past, and as you can see, and sold it. It was just kind of trading flat, wasn't doing much for me, and as you can see, it's well, I think it was doubled, but until it came back down. But here's kind of the 1-year view of it. There's the pandemic, and it's kind of ran up, but they've kind of you'll have to research that for yourself unless I make another video in regards to why it's been coming down. But just wanted to bring these all to your attention. I'm not going to read the whole article to you. Again, if you want to pause and read it for yourself, this is on Investor Place. Next on the list is Qualcomm. The massive catalyst with 5G technology, Qualcomm is set to churn out high-quality growth in the immediate future, plus the deal with Apple. Apple ensures that it will have dependable customers on the other end of the transaction, so could be a good deal for Qualcomm. Alibaba does not give a discount. I believe, we'll take a look here at Qualcomm. I think it does. Yes, they do for those dividend investors, 1.71. If you're not familiar with Qualcomm, it engages in the development, design, and provision of digital telecommunications products and services. It operates through the following segments. Technologies, it's got licensing, it's kind of into quite a few different products. You can go ahead and pause that and read it. I don't want to make the video too long. Again, a market cap of 172 billion. It does give a dividend. It's been around since 1985. It's got decent ratings, 69%. I do not own any of Qualcomm. I own a partial share of NVIDIA. I used to have AMD. Broadcom is another one out there. But just bringing that one to your attention. So number 2 is Qualcomm. AT&T is the next one. Say what you will about it. It's one of my favorites. It's got a great yield, as you can see there. Everybody should be familiar with AT&T. It trades in the high 28s to 29. I have probably about 100 or so shares of it. We can take a quick look at it here. For those of you that don't trade it or have purchased it. But it did have a nice run-up. I did notice that. I was thinking about buying some here in today. I had some. My cost basis was about 28.25 about 3-4 weeks ago, and then I sold it, and then it ran up to about 31, and since then it's been coming back down. So I was gonna sell it. I think I sold it right in here somewhere, and I'll be making another video about that. AT&T's one of my favorite stocks, but it's got a great dividend on it, and say what you will, they're trying to clean up their debt. Either you like AT&T or you don't. Next on the list is GoGo. They have it also here in the list. The company essentially has 2 business units, commercial aviation and business aviation. And we'll go ahead and take a look at the price here. So I don't have this one memorized. So if you'd want a stock for under $10, this one would be a perfect one. It looks like it kind of ran up and kind of came back down, but a lot of stocks that I was watching today kind of had that same momentum on the way down. Probably people taking profits at the end of the year. But this one's currently trading at $9.65. Here's kind of what it's done throughout the year. Well, it has had a nice run up, so not too familiar with this one, but it's caught my attention as of reading this article, so it's had a kind of a nice run up. Really great run up here in August, so I'll have to do some more research on this one. But they engage in the provision of in-flight broadband connectivity and wireless entertainment services. It operates throughout the following segments: commercial northern aviation, commercial aviation rest of the world, and business aviation. So if we get back to getting people up in the air, get past the pandemic, this one I could see taking off. And it's headquartered in Chicago, Illinois, been around since 1991. So one currently does not give a dividend. It's kind of a small cap is what I would call it, since it's under $1 billion, but if it keeps going up, it could be hitting $1 billion. So, but anyway, that's an interesting one. That's what I'm going to do some more research on. It's kind of caught my eye now. Next is Walgreens. Say what you will about Walgreens. I have a couple shares of it. Some people are for it. I was talking to a friend the other day, thinks that Walgreens will continue to climb in regards to the Rhinoceros Rex, the CV shots. I just thought, but Amazon is kind of giving it a run. I bought a couple shares a couple weeks ago. I want to say it was about $40 or $41 a share. This one's been kind of hurt, as you can see, on kind of the downhill. I have a couple shares in an IRA that I've held for a couple of years. It does give a dividend, but as you can see, it's just been kind of on the downhill climb. Even since the pandemic, it's just never recovered from it. But everybody should be familiar with Walgreens. It's similar to CVS. It does give a decent dividend. Everybody should be familiar with that one, so you can go ahead and pause the video and I will keep moving on. But as you can see here, just like I said, Amazon's pharmacy, I can't say that off the top, pill something, um, plans to hit the wires in both Walgreens and CVS cratered. So Amazon, just the talk of getting into the pharmacy business has hurt both of those, but Amazon doesn't have all the locations that Walgreens and CVS does. So that's a asset that they have, but we'll see. Only in time will tell on that one. So next is Ally Financial. Um, Not too familiar. I've never had any shares of this one. It's a financial business. Shares were hit hard in February, falling some 25% to end the month, and then despite rallying 51% from the low in March, and still ended up that month significantly down from pre-pandemic prices, and speaks to the volatility it has seen this year. So we'll check out the price on that one. I'm pretty sure this one gives a dividend as well. So as you can see, it's currently trading for 35.66. It's kind of had kind of a rough year. Well, it's up above of what it started, and then it kind of decreased in price there during the pandemic, but it's been kind of up and down, kind of on a upward trend, so that's good and positive, a good steady trend. So this one would be worth looking into. Again, if you'd like to pause that, this is a financial business, mortgage finance operations, and as you can see, kind of a decent dividend for the price. It's been around a long time, since 1919. Pretty good size market cap, 13.33. Great ratings, 94%. So not too bad. That one be a good one. I'm gonna start watching that one as well, especially since it has a dividend. Next, Bristol-Myers. I had a couple shares of this. I sold them, I can't remember, I'd have to look back, a couple months ago. It was just kind of trading flat. Wasn't doing much, so just kind of parted ways and bought something else. Anyway, Bristol-Myers Squibb. Current company is a result of its mega acquisition of Celgene, which Bristol-Myers got just over a year ago in late 2019 for $74 billion. This was a massive deal that generated great long-term value. So still one to watch. It's still one that I've been watching. It was just trading flat, and I had just had it for a couple years and wasn't doing much for me, so just like I said, decided to part ways. But it's yes, about a 62.10. I think that's about what it was when I got rid of it. But you can see what it's done here over the year. It's pretty much recovered. Not a whole lot of growth with this one. It's kind of like Pfizer. If you follow my channel, Pfizer is one of my favorites. Say what you want about it. Put it in the comments. It doesn't matter to me. I'm continuing to hold it. We'll see what 2021 brings it. But this one's just been kind of trading flat. If you were to draw a line here, you can see that. This one does give a dividend, 2.93, so not too bad. In the biopharmaceutical, so you never know. When some of the biopharmaceuticals run up, they all kind of tend to. But that's kind of it for the list. Kind of an interesting list. Some ones for you to watch, and might be worth looking into. Again, I'm not telling you to buy any of them, just bringing those to your attention. There's been a lot of talk about Alibaba out there. I've heard some talk about Qualcomm. Of course, everybody talks about AT&T. I'm going to start watching this GoGo. That's kind of an interesting one. And Ally Financial is the two that I'm going to be watching in the list. We'll see where it takes in. If I get into those, I'll let you know and make a follow-up video on those. But just bringing those to your attention. The 7 cheap stocks that can't wait for 2021 might be ones for you to watch. If you purchase any of those, let me know. If you already have them, let me know in the comments. It'd be interesting to know. And this could be one of my last videos of 2020. I started about 3 weeks ago. Tomorrow, I think, will be 3 weeks old tomorrow, and I've had a lot of growth. Trying for 75 subscribers by the end of the year. I think we're going to do it. Last time I checked, we were setting at 70, so I'll have to set a new goal. I got a lot of good videos coming out tomorrow. I'll be releasing those, so go ahead and subscribe. If you haven't hit that like button yet, what are you waiting for? Don't wait for the new year to hit it. Hit it right now. So jump off the couch. If you have a drink, drop your drink on it. Just don't spill it. I'm hearing fireworks in my neighborhood, so light a firework on it. Make it red hot, and go ahead and subscribe. And I thank you for all the support on the channel. And just wanted to bring some other ideas for you, and so we can build our community and all make money together. I appreciate all the support and growth, and you have a great new year, and we will see you all in the next one. Happy trading, happy investing, stay green, cheers, happy new year.